This is a live Channels television event.
CIB, the chairman of the body of bank CEOs and the group managing director and chief executive officer of United Bank for Africa. Please, another round of applause for him. And our distinguished guest speaker, the governor of the Central Bank of Nigeria. Sir, I agree with him. Indeed, last year when you were here for the 59th annual dinner, you did not just give a scorecard of what you have done so far. You gave a projection of what is yet to come. And I can stand here boldly and say, listening and watching that speech, that you have indeed delivered on those promises. So when he said that we have a stable economy, I said check. We have a stable naira, I said check. And when he said that all around the economy is looking better, I said check. And tonight we look forward again to more of what you have in store for us. Distinguished ladies and gentlemen, before I invite the next person to come up here on stage, permit me to recognize again one of our past presidents who joined us after I'd recognized the others. He's Dr. Segun Aino, OFR, FCIB. Please put your hands together for him. Thank you. Past President 2012 to 2014. Thank you so much, sir. We also have past registrars here with us. Mr. A.A. Adenobi, FCIB. Please, a round of applause for him. Oloye Esong Ogunleye, FCIB. Please, a round of applause for him. Sasheye Awojobi, PhD, FCIB. Please, a round of applause for him also. Distinguished ladies and gentlemen, permit me to also recognize here, representing His Excellency, the Executive Governor of Kano State, the Honorable Commissioner of Finance, here representing His Excellency, the Governor of Kano State, is the Honorable Commissioner of Finance, Kano, Dr. Ismail Aliyu Damaraya. Please put your hands together for him. We also have here seated the Deputy Governor, Financial System Stability, CBN, Mr. Phillips Ikeazo, FCIB. Please appreciate him. Also seated is the Deputy Governor, Corporate Services of the CBN, Miss M.M. Usoro, FCIB. Please, a round of applause. May I also recognize the Huawei Director, Nigeria, Miss Glary Gao. Please, a round of applause for her. We have here seated also the Deputy Chief of Staff to the Governor of Lagos State, Mr. Sam Igube, HCIB. Please put your hands together for Mr. Sam. Thank you so much, sirs, for being here. Without further ado, distinguished ladies and gentlemen, Mr. Governor, sir, permit me to invite to the microphone the chairman of this year's, the 60th Annual Bankers Dinner Planning Committee, and the Managing Director and Chief Executive Officer of Premium Trust Bank, Dr. Emmanuel Efe Emefianem, CON, FCIB. Please give him a round of applause. A dynamic man who brings excellence to everything he touches. He believes that no is not a word that anyone should say to you. When you hear no, you go back, regroup, and come again. Please, a better round of applause for him. Thank you.
Good evening, everyone. I want to stand on already established protocol so that we can save time. But I want to sincerely welcome every one of us to the 60th Annual Bankers Dinner 2025. Also permit me to recognize and acknowledge the Governor of the Central Bank of Nigeria and our distinguished guest speaker, Mr. Olayemi Cardoso, FCIB. Please, a round of applause for him. I also want to acknowledge the President, Chairman of Council of the Chartered Institute of Bankers of Nigeria, Professor Pius Deji Olarewaju, FCIB. It is my distinct honor and privilege as chairman of the Dinner Planning Committee 2025, the 60th edition, to stand before you this evening and before this great assembly of Nigeria's banking leadership. Tonight, this magnificent ballroom is filled with the finest minds steering our nation's financial destiny. MD CEOs of banks, captains of industry, regulators, policymakers, and esteemed guests who have traveled from every corner of our great country to be part of history. And to each of you, I want to welcome you specially to this gathering tonight. Now, for 60 uninterrupted years, the annual Bankers' Dinner has remained the unrivaled pinnacle of our industry's calendar, a tradition that began long before many of us joined the profession and has now attained Diamond Jubilee. What started as a modest gathering of bankers to foster fellowship and exchange ideas has matured into the foremost convergence of Nigeria's entire banking ecosystem, all under one roof. Over these 6 decades, this dinner has borne witness to the most defining moments in Nigerian banking history. Recall the indigenization era, the introduction of universal banking, the courageous recapitalization of 2005, the global financial crisis, the trials of recession and pandemic, and now our collective march towards a resilient, inclusive, and technology-driven financial system. In this new chapter, the regulatory directive for banks to recapitalize underscores the need for stronger institutions capable of supporting sustainable growth and global competitiveness, which also directly aids the objective of the federal government to achieve a $1 trillion GDP by 2030. To commemorate this Diamond edition, we decided to make it sparkle even brighter. And just like you've heard, tonight, one lucky guest will leave this hall not just with memories, but with a brand new car. A gleaming symbol of possibility and reward, waiting for someone in this room. So I encourage you to stay engaged, stay excited, because history is about to be made in more ways than one. Also tonight, the governor of the Central Bank of Nigeria, Mr. Olayemi Cardoso, FCIB, will share his perspective on the future of Nigeria's financial system and the role of banking in driving sustainable growth. His remarks promise to be thought-provoking and set the tone for the next chapter of our industry's evolution. Ladies and gentlemen, tonight is not a night of long speeches. It is my singular honor and privilege to present to you a man whose leadership at the Central Bank of Nigeria has been nothing short of transformative. A man who has navigated one of the most complex economic seasons in our nation's history with courage, clarity, and uncommon wisdom. Now, please, I wish to respectfully request that we all rise up to our feet and put our hands together. Let us give a thunderous standing ovation as I invite to this stage the Governor of the Central Bank of Nigeria, our distinguished guest speaker. Please, let's keep clapping. Mr. Olayemi Michael Cardoso, FCIB.
Now you know. Now you know. If you know, you know. The big ballers in town. Now you know. Now you know. Forget what I know them. How much is money?
Thank you. Thank you very, very much. Please sit down. Please sit down. Thank you very much for those very, very kind words. Thank you very, very much. Your Excellencies, the President, Chairman of Council, CIBM, Professor Pius Olanrewaju, FCIB, I will take a cue and stand on existing protocol in the interest of time. I know that normally I stand between the discussions we have here and your dinner. So I will try as much as possible not to make it any more painful. Good evening, distinguished guests, esteemed members of the Chartered Institute of Bankers of Nigeria, colleagues and friends. It is my honor to join you at the 60th Annual Bankers Dinner. I extend my appreciation to the leadership of the Institute for your continued partnership and the pivotal role you play in shaping Nigeria's financial system. Your commitment to ethics, professionalism, and service has shaped our banking landscape over the decades. During past years, this annual gathering, midwifed by the CIBM, has become a tradition and a platform for reflection, accountability, and shared purpose. It is a night when the central bank and the financial industry deepen dialogue, renew commitments, and affirm our collective resolve to strengthen Nigeria's economy. It reinforces our shared responsibility to uphold trust, transparency, and integrity across the financial system. Tonight, we gather at a defining moment for our nation. One marked by global uncertainty, domestic recalibration, and deep institutional rebuilding. Yet, amid these challenges lies a moment of renewed clarity. Over the past year, we've collectively committed to restoring macroeconomic stability, rebuilding trust, and strengthening the credibility of the Central Bank of Nigeria. I am pleased to report meaningful progress on all three fronts, even as we remain fully aware of the work ahead. Our actions continue to reflect the policy direction we articulated from the outset. In other words, we said that we would do, and we have done it transparently and consistently. Now, as I had hinted earlier, for those who know me, there's always a risk that my speeches at the CIBN can be long. Now, today I have brought two versions of the speech. One is the long one and one is the short one. The long one, actually, let me say that again. The short one has no reference whatsoever to foreign exchange. The long one has reference to foreign exchange and everything more. Which one do you want? Tonight, as you sit comfortably, I will take you on a journey. Over the past 2 years, Nigeria has undertaken one of the most ambitious cycles of reform in its history. These reforms required courage, sacrifice, and patience. This evening, I will reflect on our journey from November 2024 to date, highlighting the bold policies that are restoring stability to the macroeconomic environment. I will also look ahead to the emerging opportunities before us as we enter 2026 with a newfound resilience and stronger economic fundamentals. Before I take you on this journey, I must acknowledge the very real challenges facing many communities across our country. Recent incidents and the renewed international spotlights on Nigeria's security situation have underscored the human toll of conflict and the urgency of sustained solutions. On behalf of the Central Bank, I extend our deepest sympathies to all families who have experienced loss or disruption. While security matters fall outside the bank's mandate, we recognize their profound economic implications. The government is taking steps to address these issues, and as monetary authorities, our role is to ensure that the economic foundations remain stable and supportive so that investments, livelihoods, and community resilience can continue to strengthen as broader national efforts advance. Recent reforms have begun to ease inflationary pressures, stabilize the exchange rate, and restore investor confidence. The remarkable endurance and tenacity of Nigerians bolster our resolve at the Central Bank to improve our internal processes, deepen analytical rigor, and ensure that our policy is anchored on evidence, transparency, and our duty to the Nigerian people, even amidst global uncertainties. Our vision is clear: a central bank of Nigeria that is trusted and respected. Nigeria in a shifting global landscape. To fully understand Nigeria's trajectory today, it is important to situate our recent reforms within the world around us. Global growth continues to moderate as geopolitical tensions, supply chain realignments, and rising protectionism reshape the world economy. Advanced economies are adjusting to slower growth paths, while many emerging markets, particularly in Africa, continue to contend with tightening external financing conditions and persistent price pressures. Yet, despite these headwinds, pockets of relief across the continent have been assisted by a softer US dollar and easing global inflation. Many African currencies previously under intense pressure are beginning to stabilize. Supported by improved economic management and domestic reforms, Sub-Saharan Africa is projected to grow by 3.8% in 2025 and 4.4% in 2026, according to the World Bank. Nigeria, Ethiopia, and Côte d'Ivoire are leading this continental recovery, demonstrating the impact of decisive reforms, credible institutions, and focused policy direction. Distinguished guests, this type of resilience is never automatic. It is the outcome of difficult, disciplined choices. Choices we too have had to make. A case in point is Nigeria's improved economic diversification, with oil now accounting for a smaller share of our GDP and 33% of government revenue and 51% of exports, significantly reducing our vulnerability to oil price shocks. Ladies and gentlemen, the story of Nigeria's economic recovery cannot be appreciated without first recalling where we started, because the reforms of today are born out of a determination to change the conditions we met. When this leadership team assumed office, our economy faced severe macroeconomic distortions. Inflation was surging, foreign exchange liquidity had evaporated, external reserves were non-existent, trust in economic management had weakened, unorthodox monetary practices had eroded confidence. Businesses could not plan or price. Investors could not commit. The foreign exchange market was in paralysis. A backlog of over $7 billion in unmet foreign exchange obligations undermined market integrity. The spread between official and parallel market rates had blown out to more than 60%, creating distortions and huge rent-seeking opportunities. High inflation had become normalized, stuck in double digits for most of the last 35 years, and risen to 34.6% as of November 2024. Food prices were crippling households, liquidity conditions were unstable, many businesses faced an existential threat. The banking sector, though fundamentally sound, was at risk of being dragged into distress by a deteriorating macroeconomic environment and inconsistent policy signals. This was the Nigeria we inherited, not one standing at the edge of a macroeconomic precipice, but one that had already gone over the cliff. It is important to recall this, not for drama, but for context. The progress we so cautiously acknowledge today is meaningful only when measured against the depth of the challenges that came before it. Over the past 12 months, Nigeria's economy has transitioned from crisis management to laying the groundwork for a sustainable recovery. After nearly a decade in which real GDP growth averaged about 2%, reforms have restored momentum and confidence in our broad macroeconomic environment. Our economy grew by 4.23% in the second quarter of 2025, the strongest pace in 4 years, driven by improvements in telecommunications, financial services, and oil production. More importantly, in terms of long-term stability, inflation, while still high, has moderated consistently. From a peak of 34.6% in November 2024, it has more than halved to 16.05% in October 2025. Welcoming my dear friend and brother, the Governor of Lagos State. Mr. Governor, I will repeat this again for your benefit because I know you like to hear it. And we were talking about inflation and how inflation has more than halved since November 2024. It has more than halved from a peak of 34.6% in November 2024 to 16.05% in October 2025. This marks 7 consecutive months of disinflation. Food inflation, the largest single component of the basket, fell to 13.12% in October, down from 16.87% in September and 21.87% in August. This significant steady decline in inflation is restoring real purchasing power for households and businesses. It also demonstrates disciplined execution and Nigeria's return to orthodox monetary policy. We continue with determination to bring inflation down further. The current double-digit rate cannot be acceptable. Price stability is the foundation of sustainable growth. Our transition to an inflation targeting framework is gaining traction. We have improved data analytics, strengthened communication, and ended monetary financing of fiscal deficits. These actions have strengthened monetary policy transmission and anchored expectations. Our models project continued disinflation in 2026, helped by stronger domestic production, improved foreign exchange liquidity, and more disciplined liquidity management. As inflation moderates and becomes firmly anchored, we will calibrate the policy rate in line with evolving data. Domestic and international observers alike have noted Nigeria's, and I quote, huge turnaround in macroeconomic management. Our commitment remains clear. Monetary policy will stay evidence-based, data-driven, and unwavering in its pursuit of price stability. Foreign exchange market reforms. Perhaps the most visible sign of renewed confidence in our economy is the transformation of the foreign exchange market. Over the past year, we have sustained the unification of the multiple exchange rate windows. Today, the once crippling multi-billion-dollar FX backlog has been fully cleared, restoring credibility and giving businesses the confidence to plan. The introduction of the Nigeria Foreign Exchange Code has established clear rules for transparency, ethics, governance, and fair dealing amongst authorized dealers, while the deployment of the electronic foreign exchange management system powered by Bloomberg, BMAT, has transformed FX trading through mandatory order submission, real-time regulatory visibility, and enhanced price discovery. Together, these reforms have reduced opacity and manipulation and restored discipline to the markets. The Naira now trades within a narrow, stable range. The once substantial gap between the official and parallel markets has shrunk to under 2%, down from over 60%. Foreign capital inflows reached $20.98 billion in the first 10 months of 2025, a 70% increase over 2024. And a 428% surge compared to the $3.9 billion recorded in 2023, reflecting a clear resurgence in investor confidence. External sector progress. Nigeria's external sector strengthened decisively in 2025, with the current account balance rising over 85% to $5.28 billion in Q2, up from $2.85 billion in Q1. Bolstering our external buffers, foreign reserves reached $46.7 billion by mid-November, the highest in nearly 7 years. And providing over 10 months of forward import cover and significantly enhancing the economy's resilience. Ladies and gentlemen, what is by far more important here is that our reserves are being rebuilt organically, not by borrowing, but through improved market functioning, stronger non-oil exports, and robust capital inflows. While oil production improved moderately to an average of 1.45 to 1.52 million barrels per day in 2025, the truly encouraging development is the strong performance of non-oil exports. Supported by ongoing reforms and greater exchange rate flexibility, non-oil exports have grown by more than 18% year-on-year, reflecting rising competitiveness under a truly market-driven foreign exchange framework. As with foreign investor inflows, diaspora remittances have also strengthened with confidence, returning to official channels following enhancements in transparency, settlement efficiency, and reporting. Remittances increased approximately 12% this year, and we expect this momentum to continue as the non-resident BVN launched earlier this year becomes more widely adopted in 2026. At this stage, I must really commend the efforts and the commitment of the banking community on this line. because this took a lot of effort in reaching out to the diaspora in several parts of the world, in coming up with innovative solutions, in understanding their problems. And now we find a situation where the banks are themselves coming up with those innovative products. So a big round of applause for the banking industry, please. We are committed to maintaining the current flexible exchange rate framework that allows the Naira to act as a shock absorber while limiting excessive volatility. To strengthen this framework further, we will shortly be unveiling the revised foreign exchange manual to expand market participation and tighten documentation standards, enhance EFMS surveillance, and ensure consistent implementation to avoid any possibility of policy reversal. Fixed income market reforms. A functional, transparent, and liquid fixed income market is critical for effective monetary policy transmission and for mobilizing long-term domestic savings. Working very closely in the past year with the SEC and PENCOM, both of whom have issued complementary rules, the over-the-counter secondary market is transitioning to a more transparent and robust regulatory framework that better serves investors and market participants. These reforms are foundational steps towards ensuring that Nigeria's financial markets can support deeper investment, accurate pricing, and stronger monetary policy transmission. We expect continued progress into the new year as implementation strengthens and market participants adapt to the higher standards of disclosure and discipline required. The Central Bank of Nigeria will do everything necessary to protect the financial stability that is rewarding us with improved international investor sentiment. Growing international confidence, the rating agencies. Recent assessments by rating agencies have provided significant external validation of Nigeria's reform trajectory. Fitch, Moody's, and Standard & Poor's have all acknowledged the positive impact of Nigeria's reforms, from stronger reserves to improved fiscal discipline and greater FX transparency. Across all three agencies, the direction is consistent. Fundamentals are strengthening, reform credibility is rising, and Nigeria's risk profile is improving. Fitch upgraded Nigeria from B- to B stable, recognizing our commitment to orthodox policies, including FX reform, monetary tightening, and ending deficit monetization. Moody's also raised its rating from CAA1 to B3 in May, citing improved fundamentals and a stronger outlook. And just this November, S&P affirmed B- and B and revised its outlook to positive. Underscoring sustained reform momentum, rising reserves, and enhanced macroeconomic resilience. Ladies and gentlemen, this evening, Moody's concluded its periodic review, and while headlines may highlight risks as rating agencies are mandated to do, the substance of the report reaffirms ongoing improvements, including strong fiscal matrices and deeper diversification. These nuances matter, and this is precisely why we must continue to tell our own story clearly, consistently, and confidently. Nigeria's model implied scores are trending upwards, and as reforms deepen and data continues to validate progress, these legacy qualitative reservations will diminish, paving a clearer path to future upgrades. These endorsements of Nigeria's policy direction have translated directly into improved borrowing terms, increased investment inflows, and enhanced credibility. Underscoring this progress, Nigeria this month successfully raised $2.35 billion through a Eurobond issuance, attracting $13 billion in orders, the largest in the nation's history. Banking sector health. Nigeria's banking system remains fundamentally strong and resilient, a cornerstone of our financial stability. At the same time, we remain vigilant to emerging risks, including cyber threats, credit concentration pressures, and operational vulnerabilities. These are being addressed through strengthened risk-based supervision and our ongoing transition to Basel III, which will further bolster resilience, improve capital quality, and strengthen liquidity monitoring. With just over 4 months to the conclusion of the recapitalization exercise, I am pleased to report that the process is firmly on track. Several banks have already met the new capital thresholds, while others are advancing steadily and are well positioned to comfortably meet the March 31st, 2026 deadline. To date, 27 banks have raised capital through public offers and rights issues, and 16 have already met or exceeded the new requirements. This is a clear testament to the depth, resilience, and capacity of Nigeria's banking sector. As we strengthen the capacity of our banks, stress testing this year confirms that Nigeria's banking sector remains fundamentally robust. Key financial soundness indicators overwhelmingly satisfied prudential benchmarks during the year. We are reinforcing operational discipline to ensure the financial system serves all Nigerians reliably. Our starting point was a comprehensive end-to-end review of the entire cash cycle, from production to transportation to distribution and eventual access by consumers. This holistic assessment enabled us to address root causes rather than symptoms. As a result, we recalibrated our cash printing models, issued guidelines on the optimal ATM to card ratio, strengthened requirements for CBN approval before ATM or branch closures, enforced sanctions on banks whose ATMs fail to dispense cash, and intensified supervision of payment agents and POS operations nationwide. Our decisive actions on regulatory forbearance mark another turning point on recapitalization. I beg your pardon. Forbearance marks another turning point. As recapitalization progresses, we are redesigning the credit risk framework to enforce stronger governance, greater transparency, and firmer accountability across the sector. We are determined to break the boom and bust cycle that has accompanied past recapitalization efforts. MSMEs remain central to our efforts. This year alone, microfinance lending expanded by over 14%, and new digital credit products reached more than 1.2 million small enterprises, evidence of the sector's growing depth and capacity. We are improving access to credit, supporting microfinance institutions, and expanding financial products tailored to smaller enterprises. Payment system modernization and digital finance. Nigeria's digital finance transformation accelerated in 2025, reflecting our twin priorities of fostering innovation while safeguarding stability across the payments ecosystem. Earlier this year, we extended our payment system vision roadmap to 2028, an ambitious commitment to modernize payments infrastructure and strengthen cybersecurity. More than 12 million contactless payment cards are now in circulation. Our regulatory sandbox has expanded to over 40 fintech innovators, enabling safe experimentation and responsible scaling of new digital finance solutions. Revised agent banking guidelines have tightened anti-money laundering controls, including geo-fencing of high-risk areas, while improving consumer protection at the last mile. Integration across switching companies has improved, bringing Nigeria close to seamless domestic interoperability. Supported by these measures, Nigeria today stands amongst Africa's most advanced digital payments markets with a dynamic fintech ecosystem. That has produced 8 of the continent's 9 unicorns. By mid-2025, leading fintech apps had surpassed 10 million downloads each, with one particular one surpassing 50 million downloads, reflecting deep consumer adoption. In parallel, our engagement with the global fintech community has been a further significant supportive mechanism. The strategic fintech dialogue at the IMF 4 meetings brought together policymakers, innovators, and investors, culminating in a consultative report that will guide Nigeria's next phase of fintech evolution. As digital assets, tokenization, and stable coins become critical topics for central banks worldwide, our stance remains clear. We will lead thoughtfully with discipline and clarity of purpose. Innovation must proceed responsibly, anchored in consumer protection and financial stability. FATF grey list exit, restoring confidence. One of the most significant achievements this year was Nigeria's exit from the Financial Action Task Force, FATF. This milestone was a result of a coordinated national effort led by the federal government, with critical contributions from the Central Bank of Nigeria, the Ministry of Justice, the NFIU, the EFCC, and our regional partners. Through stronger supervision, improved reporting standards, enhanced intelligence sharing, and governance tools such as EFMS and the FX Code, we address the deficiencies identified by FATF during its on-site assessment. Nigeria's grey listing carried a significant cost. Countries in this category typically experience a 7.6% of GDP drop in capital inflows. In the first year for Nigeria, that translates to more than US $30 billion in potential investments. Exiting the list, therefore, signals a major restoration of confidence and eases compliance frictions for correspondent banks. The global financial community has welcomed Nigeria's exit, noting improved access to international finance and smoother cross-border payments. Financial inclusion and expanding participation. Financial inclusion continues to deepen. At 74%, the share of adults with access to formal financial services is approaching the global average. More than 3 million agent bankers now serve communities nationwide. Inclusion, however, must go beyond account ownership. It must translate into meaningful economic participation. To this end, we launched a Women's Financial Inclusion Dashboard, a Women Entrepreneurs Finance Code, and an Inclusion Roadmap for Displaced Persons, initiatives designed to ensure underserved groups can access and use financial services. Digital wallets, mobile money platforms, and fintech-enabled microcredit solutions continue to expand options for household and MSMEs. Strengthening trust through transparency and thought leadership. Thought is the backbone of any financial system, and it is built through transparency, consistency, and sustained engagement, principles that guide our relationship with the CIBN and the broader financial community. This year, we expanded our external engagements and thought leadership initiatives to rebuild credibility, elevate Nigeria's presence in global economic discourse, and reinforce confidence in our reform trajectory. For example, in New York, we presented Nigeria's reform story at the NASDAQ market site in Times Square, sharing the stage with a Nobel Prize-winning economist and leading global emerging markets investors. We directly engaged key institutions and Nigerians in the diaspora. At universities, the Lagos Business School and the London Business School, for example, we met with young Nigerians alongside policymakers, business leaders, investors, and members of our diaspora community, deepening understanding of our monetary reforms and building trust across generations and constituencies. Fiscal monetary coordination, and this was something that was so eloquently spoken about earlier by my dear friend, the MD of UBA. Monetary reform cannot be effective in a vacuum. Alignment with fiscal policy has strengthened Nigeria's macro stability and yielded tangible results, including reduced domestic borrowing costs, improved liquidity conditions, and more predictable fiscal operations. The discontinuation of direct deficit financing signals one prong in our commitment to discipline. This stance is unequivocal. There will be no return to the practice of financing fiscal deficits by the central bank. In parallel, the fiscal authorities have embarked on key institutional reforms, including the implementation of a revenue optimization framework, RevOp, and the establishment of a new National Revenue Agency and upgrades to the Treasury Single Account TSA to strengthen revenue mobilization and public financial management. As we transition towards a full-fledged inflation targeting framework, this partnership will deepen, ensuring fiscal and monetary policies reinforce each other in delivering durable price stability. Compliance, digitalization, and operational effectiveness. Digitalization, as we all know, is reshaping the global financial system, and the central bank is preparing deliberately for this future. In 2025, we established a dedicated compliance department, now fully operational, with mandates covering financial crime supervision, market conduct, enterprise security, corporate governance, and ESG. We also accelerated our internal digital transformation, deploying AI-enabled tools to enhance productivity and rolling out DocFlow, our digital records management system, to strengthen efficiency and transparency. Capacity building is now a core pillar of our reforms. Our people are undergoing targeted training in AI, blockchain, digital assets, and data governance frameworks, ensuring that the bank develops the technical depth to regulate an increasingly complex financial landscape. We are, at the same time, improving how we serve this market, streamlining licensing processes, accelerating approvals, reducing bottlenecks, and issuing clearer, more consistent circulars. The goal is simple: a central bank with the institutional capacity, digital readiness, and operational agility to meet the needs of its constituents and the demands of a rapidly evolving financial system. As we look towards 2026, our strategic priorities are clear and actionable. 1, strengthening the banking system, safeguarding stability, protect depositors, and support credit growth through rigorous supervision and strong governance. 2, delivering durable price stability, refine our inflation targeting framework, and deploy advanced analytics to anchor expectations and lower inflation sustainably. 3, modernizing payments and promoting financial inclusion, expand contactless payments, and strengthen digital rails. 4, fostering responsible fintech innovation, support fintech expansion while protecting consumers, strengthening cybersecurity, and safeguarding financial integrity. This includes enhanced data governance standards, stricter licensing requirements, and clearer guardrails for digital asset experimentation. 5, building institutional capacity and efficiency, strengthen staff skills, streamline processes, and reduce bottlenecks in licenses and approvals to support a more agile, responsive central bank. 6, deepening partnerships and thought leadership. Collaborate with regulators, industry stakeholders, and international partners to reinforce Nigeria's position as a trusted and respected central bank. These priorities are not abstract aspirations. They are practical, measurable, and fully aligned with our mandate to safeguard monetary and financial stability. And ladies and gentlemen, similar to what I did last year, hopefully I'll be back here next year. Hold me to account. In conclusion, you said you wanted the longer version. Distinguished guests, the foundation for a revitalized Nigeria has been laid, but the journey is far from complete. The progress we have achieved reflects partnership, discipline, and the courage to pursue necessary reforms. It demonstrates that when we unite behind difficult choices, Nigeria can chart a new economic course, one defined by stability, innovation, opportunity, and shared prosperity. This year's actions include the deployment of the electronic forex market surveillance system, the shift to a single market-determined foreign exchange rate regime, and enhanced risk-based banking supervision underscore our track record of reform delivery. They have strengthened Nigeria's capacity to absorb external shocks from volatile oil prices to shifts in credit rating sentiment. With oil now a smaller share of GDP and fiscal revenue, a sharp oil price decline will be cushioned by the flexible FX regime, rising non-oil exports, and growing services trade. In short, Nigeria is more resilient to external shocks today than at any point in our recent history. My promise to you is that the Central Bank of Nigeria will continue to steer monetary policy with discipline anchored firmly to its core mandate of price stability. Stability remains the bedrock upon which investment flourishes. Resources are allocated efficiently and purchasing power is protected. In 2026, we will deepen engagement with stakeholders, strengthen collaboration with other regulators and international partners, and foster responsible innovation across the financial system. We will continue to provide forward guidance, protect the integrity of our financial markets, leverage technology and AI to improve decision-making, and build institutional capacity to support an evolving and resilient financial system. By remaining disciplined, forward-looking, and true to our mandate, we will ensure that Nigeria's economy remains stable, inclusive, and primed for sustainable growth. Ladies and gentlemen, I really do thank you so much for your attention. And on a lighter note, I think you have all earned your dinner.
Joy is coming, joy is coming. Joy is coming, only early in the morning. Joy is coming, joy is coming. Joy is coming, only early in the morning.
I totally agree. Joy is coming. The road might be rough, but we are actually flying steadily. Can we give another round of applause to the Governor of the Central Bank of Nigeria? I'd like to welcome here tonight Mr. Yibi Ping, live with his wife. They are representing the Taipei Trade Office in Nigeria. Mr. Obonna Ukeki, essay to the Deputy Governor of the Central Bank, of the Speaker of the House of Representatives. Dr. Baba Musa, DG YFM, and President of Nigerian Economic Society. All of them are here. It's been an amazing presentation. And also want to soften things a little bit. Only a few days ago, he was 40. And like they say, life starts at 40. At 40, it is new jokes, new comedy, new presentation, new look. If I call him Chibunna Stanley, you might not know who I'm talking about. Yeah. But she will tell you who we are talking about.
Thank you very much, Your Excellencies, distinguished ladies and gentlemen. What a scorecard to present. The Governor of the Central Bank of Nigeria again is walking the talk. Please, another round of applause for him. And you know, while he was given that scorecard and given further projections of what to expect, the governor of Lagos State walked in. His Excellency Babajide Sanwo-Olu, FCIB. Please, a round of applause for His Excellency. Thank you so much, Your Excellency. Another fine gentleman. Somehow, the finance industry produces fine gentlemen that walk the talk. And when I say their word, you can take it to the bank. I mean that literally. Please put your hands together for them. Thank you.
Taribio,
yes.
Immediately after the comedian, His Excellency, the governor of Lagos State. In the last 3 years, he's been wearing suit like all of us. Tonight is slightly different.
I think it's deliberate. He's deliberate, yes.
Okay, so, Your Excellency, I welcome you one more time.
Thank you so much, Your Excellency.
Immediately after the comedian, he'll be here.
We also have here seated the president of the Chartered Institute of Directors, Otumba Adetunji Oyebanji, FCIOD. He's represented by Mrs. Kemi Parker, Assistant Director, and Mr. Pius. Please, a round of applause for them. The next act I'll be calling is a young man whose job it is to make us feel good and happy. Tonight, we have listened to the financial aspect, to the economy, and we have seen the job that the governor of the central bank is doing. It is also fitting that when we have pondered on all these tidbits that he has given to us, that we also have a moment of relaxation. We're balancing this tonight. I would like to invite to the microphone a young man who is doing very well in his craft. He is a creative that is going places. We call him Funny Bone. Please, a round of applause for him.
Joy is coming. Joy is coming.
Thank you.
Joy is coming.
Thank you. Good evening, Your Excellencies, distinguished ladies and gentlemen. Good evening. Standing on the existing protocol, first I'd like to salute Mr. Governor. He doesn't like the word Your Excellency, so Mr. Governor, the Governor of Lagos State, my friend, my colleague, my guy, my homeboy. Your Excellency, I saw a video of you last week. You were rapping to a popular song. Your Excellency, my industry, we're full. There's no space for you, sir. Remain where you are, sir. Because the way you're going, sir, next week they will call you to perform. But thank you for what you do for us. Please, can we give our governor a round of applause, please? Yeah. Youth-friendly governor. And now to the bankers governor, the governor of CBN. We share a lot in common, me and you, sir. And I will take it one by one, sir. Mr. Governor, you attended St. Gregory. You left 1980. I was born 85, but I attended the same school. So we're upgrades. That's one. Your middle name is Michael. My middle name is Michael. We're getting there. You left St. Gregory. You studied at Aston University in the UK. My father could not afford it. I went to Unijos. But to meet you in the Aston, I support Aston Villa Football Club. So you see that we're getting there. Now, sir, where I said I will leave you, you cannot kill me. You have 5 kids. Well done, sir. I have 2. Your economy then is not my economy. Sir, I want to say thank you for stabilizing, dollar and then. Please, can we give him a round of applause? Let's clap for the man. Thank you, sir. Sir, I've noticed that people of your era, you look younger. You look younger. And it's because of the kind of music you consumed when you were younger. Music back in the day, in the 80s, made more sense. And if you see the 80s men now, men who were teens, the 80s, they look younger mentally, physically, because they consume songs that, could resonate with their health. Their BP is normal. Everything is normal. So my generation, the songs we consume, the noise. In the 80s, who remember this man? Ebenezer Obey. It's a song. It means wait for your time. When it's your time, you will make it in life. That song is 32 years. He sang it now. He knows the song. Who remembers this man from Edo State? Late Sir Victor Owaifo. Eni kweneve joromi, jomi, jo. That song is 32. He sang it now. The meaning is still evident. For the Igbos here, who remembers late Sir Oliver de Coke? Amazing song. He said, Ibiri o, Ibiri kambiri, onyazo no wazo, uwagabas. It means live and let live. The word can contain all of us. He did not sing it, but he understands the meaning. Who remembers late Sir Osita Osadebe? Osondi Owendi o, Osondi Owendi o, Osogi Owegi Wenu, Osondi. That's his song, Governor Wike, remixed to as he dey sweet us, he dey pain them, as he dey pain them, homo he dey sweet us. He's singing it. He can connect. Those were when songs had meaning. Your Excellency, nowadays, 2 Lagos boys from Ajegunle enter studio. Yoko Koko, yeah, Yoko Janoi, oh Mama Moho, I am standing by your window. Are you a thief? Use the door. Where the window? That's not all. One popular Anambra boy. They called me now, Mr. Governor. Nobody celebrated me. Nobody shouted. If they call Flavor now, Your Excellency, they will shout, "Ooh, Flavor!" Ooh. But they called me. Nobody. Sir, Flavor songs. He did a song I don't understand. He said, and I quote, "Haladala go. Ifebala babago, umwayana kuware, eburubago, eburubada, baby fire they go. All the boys they don't colo, they want to potom potom pom. She want to pom potom potom pom. Waka waka baby, wuru wuru baby, corner corner baby. I go tell my mama, I go tell am say, you be waka waka baby. Baby sawale. Sir, see your bankers. See your bankers. See your bankers. Even my account officer singing this song. I'm watching you. He didn't stop there. He went further. Porokotum, boom, boom. Porokotum, boom, boom. Bakoroba. Bakoroba, boom, boom. Ochori bobo, ukunwa baby, achukurege, awosa, Sir, can you spell Good night, thank you. That's my time. Good night.
Attention, if you're not spending money, go. Anything woman don't she doggy, misplaced priority, can be broke, can be lazy.
You agree with me that every part of this young man is funny? That is why we call him Funny Bone. Distinguished ladies and gentlemen, we want everyone to know that we're having the 60th annual Bankers Dinner here tonight. So I would like to crave your indulgence that you bring out your phones. As we take this selfie, we are doing it with a hashtag. Please, with a hashtag. You and I know the hashtag will drive it further and everyone who clicks on the hashtag can see all those that attended. For those who are here with their principals, please, you can help your principals do the posting. I know that some of them might not be actively on social media, but for oh, you disagree, sir? All right, then we're on social media. Thank you very much, sir. Even though some millennials and baby boomers might not understand the slangs of the Gen Zs and the Gen Alphas, but we are trying, sir. So please, we'll use the hashtags. Can we bring out our phones, please? Please bring out your phones. We want everyone to know we're having the 60th annual Bankers Dinner. This is 6 decades of this dinner being held. It's not a small thing. Please bring out your phones. Can we do this now? I'll tell you the hashtag the moment we're done with the pictures, with the selfies. All right. So this is mine. A very young is, where is your phone? All right. So can we bring out our phones and take our selfies? Okay, I like this background. This looks beautiful. Okay. So I have my selfie, then I'm taking a video. Can we, I'll say hip, 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 hooray, is 60 years, 6 decades. So when I say hip, 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 as we say hooray, it will be recorded. Are we ready? Are we ready? Hip, hip, hip. Hip, hip, hip. Hip, hip, hip. All right, thank you all so much, thank you. You know, it's one thing to call for this and it's another for everyone to participate. I do not take it for granted. Thank you so much, I'm grateful. Now the hashtag that we're going to be using tonight is the hashtag 60th CIBN dinner. The hashtag 60th CIBN dinner. The second hashtag is CIBN Annual Bankers Dinner. So whatever you post tonight, whatever pictures you send, the videos, make sure you use these 2 hashtags. Thank you all so much. Thank you.
Thank you, Taribiu. Thank you very much. Your Excellencies, distinguished ladies and gentlemen, the man that is coming here to speak now runs a state only second in Africa to Cairo. $259 billion economy by 2023 value. This same man has a state that controls or accounts for 50% of Nigerian oil value, and the banking sector is one of it. This state also runs a state that has 30% of national GDP. If you call him the president in the agbada of a governor, you'll be very right. Please welcome here the host governor, the one that has the financial capital in his hands, Mr. Obabajide Olushola Sanwo-Olu.
Many people say Ejala no be small fish. All of my dark days are gone. But won't you remake me strong? I'm proud of the man I've become. You can't have what is my own. Money most savage, I know. The more you look less, you know. My money where they can go. And me more safe now. Oh,
thank you. Thank you very much. Thank you very much. Distinguished guests, ladies and gentlemen, I think you got me. It was very intentional that I can't afford the amount of tuxedos and bow ties that are reflective of high corporate bankers, so I decided to go national and make sure that my agbada reflects the size of my wallet, the size of my personal wallet, because all of you are actually richer than the state in one form or the other. But it's nice to have all of you, and you all look well, elegantly dressed this evening. Please let's give ourselves a big round of applause. Thank you, the Chairman, Senate Committee on Federal Character and Intergovernmental Affairs, distinguished Senator Orwell, representative of the Honorable Minister for Information, the Governor of the Central Bank, who is the governor that is richer than all the other governors all put together, Mr. Olayemi Michael Kadusu, and other top management of the CBN that are here, deputy governors and other directors, members of the State Executive Council, my president, the president and chairman and council of the Chartered Institute of Bankers of Nigeria, Professor Pius Deji Olanrewaju, and his amiable wife, Mrs. Remi Olanrewaju, other executive council members that are here, the chairman of the body of bankers CEO, Dr. Oliver Alauba, FCIB, and also the MD of UBA, and other CEOs of banks that are here present, esteemed past presidents and chief executives of the Chartered Institute of Bankers that are here, the chairman of the 60th Annual Bankers Dinner, and the managing director of Premium Trust Bank, Dr. Emmanuel Emefinem, FCIB. Thank you very much, you and your other members, for the great work you have done. The registrar of the institute and other top executive captains of industry that are here, esteemed institute members, distinguished invited guests, gentlemen of the press, ladies and gentlemen. I first want to apologize for joining a bit late. It was also because of a national assignment. Some of us were earlier also attending an African Investment Forum. Some of our CEOs were also there, but I was able to make my way back on time, even after dropping in Abuja, because I cannot miss the 68th Bankers Dinner of my institute for anything. So I'm indeed excited and happy that we can make the journey back here to join you. And so, ladies and gentlemen, distinguished bankers and captains of industry, it is a privilege to join you all tonight as we celebrate 6 decades of professional excellence, 6 decades of ethical leadership, and 6 decades of transformative impact on the Nigerian financial sector. I want to join you to congratulate our president, the president and chairman of the Chartered Institute of Bankers of Nigeria, Professor Pius Deji Olanrewaju, and my entire members of the institute for reaching this remarkable milestone and for consistently upholding the highest standards in the banking practice. For 60 years, the institute has played a defining role in shaping the financial ecosystem of our nation, in strengthening regulation, in promoting financial inclusion, and enhancing capacity. We're also seeing that we're championing reforms that support economic growth. And so indeed, Lagos is proud to be hosting this landmark anniversary of our institute, and is central to the heartbeat of everything that we're doing in the economy right now. So I want to thank you all again for choosing Lagos as the host of this 60th dinner. And so as we gathered to connect, as we gather to reflect and to celebrate excellence, we must also acknowledge the realities of a rapidly evolving global economy. We're seeing regulatory shifts, we're seeing technological disruptions, and we're seeing rising customer expectation. I believe this continues to challenge traditional banking models Yet, it also presents immense opportunity for creativity, for innovation, for extensive collaboration, and for renewals. And so, in the midst of this change, we must never lose sight of the ending essence of banking, which we all know and we all believe in. It's a profession of trust, it's a profession of real relationship, and it's a profession of deep service. Beyond our various balance sheets and financial ratios, banking is ultimately about people. It's about individuals, it's about families, it's about small businesses, it's about communities whose aspiration depends on a stable and a responsive financial system. That is why, at this point, let me, on your behalf, thank our very, very able, capable Mr. Reformer, Mr. Sound and strict regulatory environment, Mr. very tough and very forward-looking regulatory environment, the Governor of the Central Bank, Mr. Olayemi Cardoso. Let me, on your behalf, thank him so very well. But the thanks is not only for him. I think the thanks should start with the President and Commander-in-Chief of the Armed Forces of the country, President Bola Ahmed Tinubu, for choosing him, but not just for choosing him, for allowing him to do the work, for allowing him to play this role, and for allowing him to keep to the mandate of the Central Bank of Nigeria. And so on your behalf, I think if we give a big round, resounding sound and applause to our Mr. President, who has led the economy of this country from the front, who has led all of the reforms and positive indices that we are seeing, even as subnationals, from the front, it deserves our acknowledgement. But to Mr. Cardoso himself, I want to thank him. And part of the things he had assured us here with this evening is outside of the fact that he had given us a blueprint of what to expect next year. He has given us a 777 pages of lecture and a script of what is going to happen next year. But he has done so very eloquently, because indeed, standing here, I can attest to the fact that the reduction in inflation numbers are real and are positive. And I can give clear examples as a political leader. About this time last year, we're struggling to buy a bag of a 50 kg rice at between 100,000 to 110, 105,000. Today, in the same country, in the same market that you go to, the price of a 50 kg rice is under 60,000 naira. In fact, if you have yours at 64 or 65,000, we deserve a big round of applause, please. You will not get anybody to buy it. I have the largest rice mill in the country. I've got over 200,000 bags, and I was convincing my colleagues a couple of days ago that I'm ready to sell my rice at 57,000, 58,000 per 50 kg bag. That is a real drop in the market. That is real drop in inflation. That is real drop in the purchasing power of our citizens. And indeed, we can see that indeed the inflation is permanently on the downward trend. He had also shown and given a commitment this evening that he is looking at recalibrating the policies, and he'll be doing it next year with sense of commitment that are evidence-based, that are data-driven, and that reflects price stability. I think we cannot get it any better. And he has continued to also show us that all of the reserves we're seeing in our foreign exchange market is at the peak of whatever we've seen in our Mother Day trajectory. We have seen foreign direct investments year on year in the last 3 years, and specifically in the last year, over 70% growth to over $20 billion. I'm sure Lagos State has a large percentage there somewhere. And we're feeling it. We're seeing the growth, in all of those things. And I think part of the final thing that I'm taking away is his commitment. The governor has committed to a disciplined environment and to price stability. And I believe these are some of the attributes of any strong central bank governor. And he had said so to say that he's also going to further deepening engagement and with stakeholders. All of us sitting down here are stakeholders in one form or the other. And he has given us the assurance that he's going to deepen engagement, meaning that he's going to listen to you. And he's going to take all of the narratives and all of the things that you want him to change, as a form of engagement. And so he needs all of our support and cooperation. And I want to assure you that we as subnationals, even as political leaders, understand and appreciate all of the reforms and all of the things that he has done and is doing for this very important financial services sector. So I think he deserves another round of applause. And so as fellow bankers, our commitment is not only to professionalism, our commitment also must be to ethical conduct. We must also be customer-centric. We must continue to be innovative. And this will remain a foundation upon which our nation will build a more inclusive and sustainable financial future. As the economic and commercial nerve center of our country, and of, in fact, sub-Saharan Africa, Lagos, we are indeed grateful and happy with the level of relationship we've built, with the commitment that we continue to give to you in the banking sector through our investments in infrastructure. Part of our commitment is to be able to move your staff and every of your customer in a timely and in a most predictable manner. And that's why we're building a lot of things on infrastructure. We're pushing on digital transformation. We're ensuring that security is not just in our lips. As you drive back this evening, check and see how many of the LED solar street lights that we're pushing on your street and your corners. And I want to assure you that before the end of December, over 50,000 lamps of solar street lights you'll be seeing in front of your branches, in front of your houses, in front of your community, so that we can enhance and we can build a security system that will take and will make you sleep with your two eyes. These are some of the commitments that we're giving to you to ensure that the ease of doing business, is not just a lip service. And we're also designing that we have a working public-private partnership, at all times. And it's also important for me, to use this opportunity to thank you. To thank you, my friends, my brothers in the financial sector. And why do I say this? Just a week ago, as typical of Lagos, we raised the largest subnational conventional bond. We went to market to raise 200 billion naira to further deepen our infrastructural commitments. And guess what? As we've done also in other markets, that conventional bond was oversubscribed by over 60%. Thanks to all of you for believing in us, for showing capacity, and for showing commitment, that this market is working and is working well for all of us. Of course, with the approval of Securities and Exchange, we intend to take a full benefit of it and be able to implement, 230 billion of that market. That shows resilience. That shows the depth that all of you have brought to bear. On another note, we're also the first to raise the green bond at the subnational. And yet again, in the green bond, it was also further oversubscribed by over 50%. We're trying to raise 14.64 billion. You exceeded that again. That also shows the commitments that you have in our state, but also shows the commitment and the depth of the financial markets and how much are we raising this. Each of them close at 16.25 and 16.5%. I think we all deserve a big round of applause. And I want to publicly thank all of you for believing in us, but more importantly, for the central bank and everybody that is a regulator for activating, the strength of a belief in our domestic money market, and we're beginning to see, the benefit and the opportunity that is abound. And so for me, is to stand here and commend the leadership of the Chartered Institute of Bankers for promoting financial literacy, capacity development, and industry-wide standard. Mr. President, thank you very much. These efforts have not only elevated professionalism within the banking community, but have also strengthened public confidence in this sector. And so as we look ahead, let us continue to work hard and work hand in hand with both government, with the regulators, industry leaders, to expand the financial inclusion, to accelerate economic diversification, to support innovation, and to build collectively a prosperous Nigeria that works for all of us, where our shared prosperity is not just in lips, it's what people can see and people can feel. Finally, is to congratulate once again the Chartered Institute of Bankers of Nigeria on our 6 decades of distinction. To thank you very much, and like the central bank governor had said, that is not between you and your dinner, but he has further assured us that he will not increase cash reserve ratios and all of those ratios. He will not change them again. And I think those are commitments that we can take to the bank. Thank you very much, and let's enjoy the rest of the evening. Thank you.
Joy is coming, joy is coming.